And we're live.
We are live. We are alive. Life is good. It's sunny in Indiana. Couldn't be better.
It's Friday. That's always nice.
Hey, so we've got the disclaimer up. Beach balls are not flotation devices. That's always good to remember, especially when it's summertime and you're heading to the beaches of Indiana, or the beaches wherever you're going. The next one though is probably my favorite. Keith is not in today, but I want to share this with you. One of the things about Keith that I love when he starts talking about opinions is that we are full of opinions. We might be wrong, we might be right, but we will not be indecisive and we'll have an opinion. That's what you pay us for, is to have an opinion. We're also students of the market and very interested in what's going on in the world and economics, and love to share those things with you. One of the economic opinions that may have come from Keith, and I've flipped through this book a couple times, is basic economics. Now, when you see the cover of this, basic economics, and then I show you this view, it doesn't seem
daunting.
Doesn't seem so basic from this view. But if you would like the cliff notes of this, I would be happy to go have coffee with you and talk with you about basic economics. Economics are a hot topic today, and that's what we're going to talk about a little bit. Amanda, what else do you have going on?
We just appreciate everyone's patience with us as we make this transition to Fidelity. And if you have not signed your emails yet, we would greatly appreciate it if you would. I've got a note about the disclaimers. I need to ask our compliance officer, do we need all of these?
I mean, we can tighten them up a little bit, but yeah, we've got to have some out there. And I'll piggyback on what Amanda is saying. Thank you for your patience as we do make this transition. It's been a good one so far. I'm blown away of how many of you have responded so quickly to get your money taken care of and in motion. And so if you have any questions about an email that is sent to you, do not hesitate to call. We're not using our fax machine anymore. We're not faxing you account docs. And so if you have any questions, if something just doesn't look right, the best thing to do is just give us a call. And you can call the main line and you can punch, I think I'm extension 3. Hit me up on there. I'd be happy to talk with you guys. But I wanted to start off the day by talking about my wife's Caroline. She has a garden, and she's been gone all week. So I've been in charge of the garden, watering the garden, just kind of pulling dead leaves off, stuff like that. And I had to send her a video today because we had red things pop on a few plants, but had some of this action, and I wasn't sure what to do. Like, look at this stuff.
Wow.
And so I asked her, I said, what do you do with this? And she said, just don't throw it away yet. Take a breather, get a knife out and cut into it and see if all of it's bad. There might be some good to it that you can salvage and redeem. May go in salsa. I may not pop it like I would like these little cherry tomatoes, but I just thought, I'm always thinking stock market, and Amanda always busts my chops for having stories.
Metaphors, the metaphors.
The analogies, metaphors. But metaphors, I was thinking about this. I was thinking, not all the stock market is bad. we can do some dissecting here and find the good. And so anyways, that's little notes from the Shreve garden. If you need a great salsa recipe, also hit me up. I've got a really good, well, Warner and Caroline have a good one. But anyway, lessons from the garden. Maybe you're a gardener and you have some lessons to share. I'd be interested in your feedback, or just send us a picture of how your garden's doing. We have raised beds. We went to one of the I think it's Tractor Supply store and bought some like horse trough type things, and that's what our garden is in. Soil's not so good, so we got to import it. But you do a garden, Amanda?
I don't. Michael would love to, but maybe just an herb garden, but we live in a townhome with no balcony, so it's a little challenging.
Yeah, that would make it a little challenging. Let's see here. Let's do you have anything else that you want to add?
Just please call us. I know there's another wave of emails going out shortly if you haven't received them already. So it's greatly appreciated that you give us a call, and we're happy to walk you through it. I personally like, if something's unknown or uncomfortable to me, I like having my hand held and like walking through it, and that's what we're here to do. So don't hesitate to reach out. We're here to help.
That second batch of emails that Amanda's talking about is in reference to mutual funds, variable annuities. If you have a mutual fund specific account, like maybe with a big company, or an annuity specifically with us, we're sending out a second batch of emails, and you would have got something from me here recently. And basically what that is that's asking you to sign off on one of our disclosures. We live in a world full of disclosures. I think way back, if you jump in the way back time machine with Doug Shreve in 1998, when I first started in the investment business, you pretty much had like one sheet of paper that you had to sign. Now, it may have been one of those carbon ones. That was like really cool technology back then. But you had one page and that was it. Today, I mean, you have miles of paperwork to sort through. And so we want to make life easier, simplify your finances. But when it comes to disclosures, there's just no simple way about it. And so you're going to get an email from me that says, hey, please take a look at Gimbal's disclosures and policies, read through them, review them, kick me back some feedback, sign them, and then we'll be on our way. So yeah, stay tuned for some more paperwork. Once we get this done, we're not going to bug you for a long time about paperwork again. So yeah, thanks for hanging in there.
And just to clarify, we're still in business. We're just changing it the way we do it a little bit. You guys won't really notice any difference besides your statements looking a little different, but like Gimbal's still here, we're all still here, and no need to panic or worry.
Hey, I want to share a big win. I know we talked about some wins here internally just the other day, Amanda, Eric, Debbie, and I, and we were sharing your success stories. And one of the biggest wins that I've seen was a good friend of mine. He's a client, and he struggled to get onto technology and view his accounts online. And he was able to log on to his Fidelity account. There's a register button, and he was able to click that and get online and have a big win. And so, you might test drive it, or if you want to give us a call and say, hey, help me see my investments online, we'd love to talk with you about it. I know it's change, but it's change that you just might like. And so if you don't, that's okay. But am I starting to sound like my mom? Eat these green beans, you might just like them. Okay, enough of that.
Let's talk some market.
Let's move to the market. Okay, so right here, what you see in front of us is the S&P. Do you see
Share
it?
your screen. Nope.
Oh, there we go. What you see is the S&P 500, and the S&P 500 has really had a decent week. This is a weekly chart, and all these squiggly lines, blue, that's good. That's an up week. The
Blue is buy.
What's that?
Blue is buy.
Blue's good, and then the pinkish fuchsia, whatever you want to call that. Those are days where the market was down. I want to show you something interesting here. If you notice on this week, it closed at a high, and so the last reporting of this data, you see this hash mark going across. That tells us that the market is closed at a high. That's a very good thing. I'm going to switch over to a daily chart. And this kind of zooms in the scope a little bit. The red line that's running across here is a moving average. It's a 50-day moving average where the prices, these are all prices, where the prices have been over the last 50 days. This black line is a moving average of the last 200 days. And so both of these major moving averages have been trending down for, well, gosh, since the flip of the calendar. And so you can see the 50-day average, the red line, hasn't started to trend up, but it has started to level out. That's a really positive sign. Doesn't necessarily mean that you want to go full throttle, but having a few positions have benefited from this. And you can see that the last couple of days have been pretty good. The one fly in the ointment here, the thing that kind of keeps me a little cautious is if we look down at the bottom, this portion of the chart tells us about volume. And all volume is the amount of buyers and sellers during that day or week or month, whatever chart we're looking at. But what we like to see is we like to see a boost of volume above its 50-day average. And right now, the volume, it's been kind of light. And so had these blue volume bars been up here, that would tell us, boy, the buyers are coming in. And the buyers aren't my Aunt Susie and Uncle Tom. The buyers would be big institutions, mutual funds, endowment funds, strong hand, strong money funds. And so I would like to see that kicking up a little bit. An example of big volume coming in would be right here. And you see the market closed at a high that day. That was very good. We'd like to see a few more of those. So this is the S&P 500. This is 500 of the largest companies that are available to buy and sell on the stock market. Most of these companies are global companies, meaning they are based and operating out of the US, but they have exposure worldwide. And so these types of companies, they go a long way. They reach a long way. I'll switch over to the NASDAQ. NASDAQ, this is about 3,500 different companies, most of them pretty large. And again, you see a nice boost rocketing through the 50-day. Now, on the plus side, if you look down here at the volume, it did. We had a day where it went through its 50-day average. So this tells us that the more tech-oriented or future-oriented companies that are more interested in plowing money into research, development, and growing rather than maybe paying a dividend or something like that. These types of companies have had a good last couple of days. And that's been really encouraging to see because, as you know, these types of companies have been hit the hardest. And they really started to turn right around Black Friday, just after Thanksgiving. These companies haven't really looked too hot since then. So good to see. And it doesn't mean that it's all smooth sailing because we're still trading below the 200-day moving average. And so I expect to see some volatility, some ups and downs as we are in between the 200-day and the 50-day moving averages. So that's just a quick snapshot on what's going on with the stock market. We also, from time to time, like to look at smaller companies. And these small companies, as we like to say, still own jets. So they're not too small, but they've had a really good last couple of days in price. They've been closing. Again, that hash mark near the top tells you that their price is closing near the high of the day. That's been very encouraging to see. We just like to see the the amount of buyers kick up a little bit. And so that's just a quick snapshot on what's going on with the market. I'll say, you know, the amount of optimists out there, I think we touched on this a couple weeks ago, 629. Let's pay attention to this area here. This side about being greedy and fearful. You know, that's a gauge that basically says, hey, while others are afraid, it's okay to be a little greedy. But I really want to focus on this side. You can see towards the end of the quarter, the bulls only made up 22%. And historically, they're around 38. So you can see the optimism amongst investors have kicked up a little bit in the last few weeks. This survey basically asks investment professionals, hey, where do you think the market's going to be in the next 6 months? Are you optimistic? Are you pessimistic? And then they gauge the scores. So the bears are still leading the way, much higher than the historical averages. But I think next week's survey, I wouldn't be surprised to see the bulls start to kick up a few notches because of the data we just looked at. We have no idea what the market's going to do, but we can get in line with what is by just looking at the market like we do, and tracking price, and importantly tracking volume. So that's a bit of the stock market. You guys have been great this year. I know we've had a lot of really good conversations centered around what is the market doing, what industry groups are leading out, and what industry groups might be coming on. So more to come, and we'll continue to update you every week on that. Thought I'd shift and talk about inflation. Inflation is probably the conversation that I've been getting the most. And basically what we're seeing out there is we're seeing a lot of money chasing a little goods. And so in 2020, just there was so much money printed that this money had to go somewhere, and it funneled into our economy. You saw real estate really boost up. You saw car prices boost up. You can't find a car. Used cars shot up. Everything shot up in price. And I wanted to share a picture with you guys. I think it's kind of interesting. Let's see here. Okay, Amanda, are we seeing the Fred, the M? Does it say M1?
Yep, money.
Okay, great. So just real quick, this is fascinating to me. And so M1, think of M1 as like currency, bills, travelers' checks, stuff like that. And you can see right here, the supply of currency shot up big time. And we haven't seen that ever. And so the amount of money that was printed into our system was just like, I mean, it shot up like a rocket. And so that's what we're talking about when we're illustrating, hey, there's a lot of money chasing few goods. And so this is nothing new. I mean, if you want to do a Google search on Milton Friedman, there's a bunch of really great old school videos that talk about this kind of stuff. And like even way back in the day, tobacco was traded as currency. There's a lot of things that can be traded as currencies. And when tobacco was traded as currency, what did people do? They started to farm more tobacco. And so they increased the supply of tobacco leaves that were available to trade. And everybody got into that. Okay, that's great. But eventually there's too much supply chasing too few goods. And so what we've seen is we've just seen a rise in cost in just about everything. And Milton Friedman, he'd be the first to say, and you'll hear it if you ever look him up, or Thomas Sowell, you look these guys up, what you're going to hear is the solution, the antidote to inflation is to stop printing money. It's like if you were to go out and maybe have a drink or two, you'd be having a good time, but then to cut it off right there, if you keep going, it's just going to be bad. You're going to have a hangover. You're going to upset people. You're going to act like a fool. And so it's the same thing with money. Is the way to stop the inflation is to stop printing the money. And so that's something you probably won't hear as you're watching the network news. Everyone's trying to find a creative solution to this, but the solution is to stop printing the money. And so there's just been an enormous amount of supply out there, and it's catching up to us. One of our clients recently bought a house, and he's the first person that I've heard of that didn't pay over asking price for a house. And so the buyers and sellers are going to have to start getting creative again and negotiating. And I think what you'll start to see is price fluctuation. Eventually, there's going to be cars on the lot again. There's going to be negotiations that you could take, that you could have for purchases. But right now, we've had so much cash into the system that it's overwhelmed it. And so on the plus side of all of this, it has been interesting. I didn't pull up the chart for this today, but it has been interesting to see what the US dollar is doing. The US dollar has been unbelievably strong. And I was born in 1975. I have no idea what was going on in 1975, except for stuff I've read. But I can tell you this, the dollar is in a stronger position today than it was in the 70s. And that's pretty interesting. There's a lot of different opinions about that out there. I think one of the opinions that makes sense to me is that with the war in Ukraine, the world has really flocked to the dollar's strength. And the dollar's strength comes from its creative power of the citizens to be innovative, to make stuff work better, more efficient. That could be everything from defense down to just engineering, computing. And so the dollar has been very strong, and that has been a plus for us. That's a tough thing if you're in a country like Sri Lanka or a more of a third world environment. And so anyway, that's what's going on with the dollar. I thought I would share this topic too, and let's see here. Amanda, what year did you graduate college?
2016.
2016. Okay, I graduated 1998. If you're on the broadcast, you go back in time and think, what year did I graduate high school? What year did I graduate college? And if I could tell myself a few things, or my son or daughter or my neighbor kid, what would those things be? And Keith has a list. If you want to get a hold of him, he's got a really good list too. But I want to encourage you guys to just encourage younger people, because what I hear a lot out there is, boy, Doug, I'm glad I'm not raising kids in this environment. And I want to tell you, I am optimistic for their future. It's going to be different than how I came out of college. It's going to be different than how you came out of college and high school. But hey, you know what? The beauty of being young is optimism. You want a new car, you want a house, you want to find a mate. I mean, there's just so much upside. And I want to encourage all of us to speak into that. And so I get the Indianapolis Business Journal, True Confessions. I get it because I like to see you in it. And I've seen several of you in it, and I just love it. But there's this dude that I kind of like. He's got a column, this guy right here. And his name is Abdul Hakim Shabazz. I mean, that's a pretty cool name, Shabazz. And so he has some advice for grads, and I wanted to share a couple of these. The first one that really jumped out to me is he said, the only thing you're owed is to be treated with dignity and respect. you're not owed anything else than that. And
Simple.
we live in such a world where people just, I mean, it's like they want to be ticked off and they want to pass that on to other people. Well, you're actually owed dignity. And so just even diving in and thinking, what is dignity? Well, there is dignity in work. And when you can have something that you're enjoying doing, where you're making a difference, it could be any kind of work. There is dignity in making life better for other people. And so I love that he talks about dignity. He also says, we will all make mistakes along the way. It's called experience. And a lot of these kids, you know, coming out of high school and college right now, they really haven't been allowed to make mistakes. They've been propped up. You can put anything you want on social media so that your life looks good, looks mistake-free. But I want to encourage you, if you know somebody, that encourage them to make mistakes, encourage them to whiff and strike out. I think one of the great ways to find success is to fail often. And so if you can do that in a safe environment where you're encouraged to learn from your mistakes and get better, that's the key. Learning is a lifelong process. And so many of you on the call, you're still learning, you're still reading, you're still experimenting in other things. Hopefully you're learning about the stock market when we talk about it on a weekly basis. Hopefully you're learning more and more about the non-financial things that are important to you that drive some money decisions. But learning, you know, just constantly learning. Find a job that makes you happy. And here's some of you will really like this one. Before you dismiss the advice of older people, remember they didn't get to be old by being stupid. I just really like that one. I thought that was pretty funny. So yeah, so share your wisdom. And then number 10 on his top 10 list was have a sense of humor. Be able to laugh at yourself, be able to say, yeah, I messed that up, or I flew off the handle. You know, apologizing goes a long way, and it goes a long way to just redemption, and there's dignity in all that. So just want to encourage you that if you're out there learning, to keep going, to keep it up. We are stoked for you. We're stoked for your life. We're happy to be serving you. In good stock markets and bad stock markets, we're here for you. So that's all I've got. Water your garden. Check your emails for DocuSign. Search in your search tab DocuSign. And if you have some questions, field all calls to Amanda. No, I'm just kidding.
Exactly.
Call me too.
We can divide and conquer. How about that?
Anything else we need to know, Amanda?
That's it. Just have a great weekend. Thanks so much.
Okay, everybody. Good to see you.
Peace out.
Bye.